Today I want to talk about how to stick to your trading plan. I want to share with you 10 ways you can stick to your plan. There's some simple things that anyone could do, but doing those things will have a big impact on you following your plan, having discipline, and kind of keeping in track with your progress in trading. You don't need to apply all 10, but you'll for sure find ideas and things you can use to get better at trading. So without further ado, let's dive right in. I don't talk about this very often, but I have a free Facebook group that you can join to be able to connect with myself and other traders. You can there see my posts, see what I'm talking about on a daily basis, see some insights and tips that you can use to become a better trader. If you want to join that group, simply go on Facebook, search for Desire to Trade Forex Traders Community, or check out the link below in the description. The first link will be for joining that Facebook group. It's 100% free, and you'll be able to follow my tips, connect with good traders who are serious about it, and want to get things to the next level. Okay, so now let's cover these tips to become a better trader who can stick to a trading plan. These are things that I've used myself, made a big difference for me. I'm sharing this from experience and what I've seen works for other traders as well in the past. First things first is to write down your rules. Now, when you write down your rules, you tend to follow them for some reason. It's like when you do something by hand, like you write things down, it tends to be a lot better. When you just have something in your mind, even though you know the rules, it's going to be harder to remember. Why? Well, because when you trade, you're under pressure. You have these emotions coming up, and if it's not written down, you didn't take the action of having this down on paper, it's going to be harder to follow for sure. So write things down. It could be like on a napkin, on a sheet of paper, anywhere you want, but just have like this plan written down. And it could be very, very simple. No need to make it like hard, complicated. Keep it very simple. It's going to work out great, but you need to have it at least written down. Now, second thing here is to test your plan. How can you follow something if you're not sure it's going to work? Like you have this good plan, but then you have no clue it's going to work in the future. It could work, could not work. How can you follow it? It's impossible. First of all, you have no confidence about it, and it's going to be hard to follow. To follow something, we need to be sure, or we need to at least have some hope that it's going to work in the future. So if you test your plan, you do some back testing, you do some demo trading, some forward testing, you'll at least have some more insights and some more confidence about this system could work. And that's a lot better to be able to follow it in the future. So test it, do a backtest over 50 trades or 100 trades, and you'll feel much better about the results. Third point is we discussed writing down the rules, but let's take it a next level, which is making a checklist. Checklists are huge because of the fact that you have this thing that you have step by step, like a step-by-step process. You can actually check it once you go through it. You can go through each step and mark it done when you finish it. So whenever you want to place a trade, have this printed out or in a digital version next to you and go through the checklist. See step 1, is it good? Step 2, is it good? Like, I need to look at the zone for this kind of zone. I need to look at this kind of candlestick. I need to look at this kind of setup after the candlestick is formed. If you have this all written down into a checklist, step-by-step process, you are sure you're never going to miss a step. If you use it, of course, to trade with it after. So writing down your plan is good, but having a checklist is a lot better. Fourth is track every trade. When you track trades, you're able to at least have something that you can measure. And you're able to see, I make these mistakes, these trades, I didn't follow my plan, they were bad trades, so therefore I should not take them in the future. If you don't track, it's like, I take a trade, it's not good, this one is good. But you never have a clear picture of what works or doesn't work. So we need to be able to track those trades into a journal to know and to kind of be more focused on really what works or doesn't work. You'll start to see pretty fast. So when I take these trades, my results suffer. My equity curve goes down, I have a bad week. But when I take this other trade, then things tend to perform quite well. This can make a big difference to track every trade you take. Number 5 is to identify your bad trading triggers. What does that mean? Well, whenever you have a series of bad trades, or an event, or like you start to not follow your plan for any kind of reason, there's usually a trigger. It's not like something that happens for no reason. There's a trigger behind it. There's a cause for that. If you can find the cause, you can fix the problem, the issue of not following your plan. So what we need to do is understand what triggers that not following your plan behavior in trading. Is it a friend who tells you, I made like 1,000% last week, I'm profitable, I'm good? Is it having a couple of bad trades or a couple of losing trades in the market? You have like 5 trades, you start to doubt yourself. You're like, let me take that trade to kind of recover really quickly. Is it seeing traders online who blast about their wins and their cars and everything of the sort? What triggers you to not follow your plan? If you can find this, it's usually going to be like at 1 or 2 reasons. It will usually be 1 or 2 reasons that are major, and you can start to work on fixing those in the future. Number 6 is get a score on your trading and try to improve it. What that means is, let's say now you take 10 trades a week, for example. To make it simple, look out of these 10 trades, how many were following your plan? And that's your score to begin with. If it's 5 trades a week, 5 trades, fine. If it's 2 trades a week, 2 trades, fine. Doesn't matter. But we want to get that score, then we want to work on improving that score in the future. So if we have a 5, next week we should try to get a 6. If we have a 2, we should try to get a 3 next week. If you have an 8, let's aim for a 9 next week. Good traders and people who are successful long term aim for a 95% what we call compliance level, which means 95% of the time they follow their plan. 5% of the time it could be a mistake, could be an issue, it could be something that they didn't think about, or they didn't follow their plan at that time. If you can get that 95% of compliance level, you're pretty good and you're able to really get better results in trading because you don't have this issue of not following your plan, and your result will be a lot better overall. Your equity curve will go up, things will start to normalize, and you have a much better chance of staying successful in trading. So get that score weekly, monthly, then try to improve it over time. Number 7 is get accountability. What this means is you need to find, it could be a coach, it could be a friend, it could be a trader you know, it could be a hedge fund manager, it could be anyone that you can think of who can keep you accountable. I've worked in the past with multiple coaches to be able to stay accountable to them on different areas to improve my mindset, improve my strategies, improve my skills overall, and it had a big impact on me. I probably spent like around at least like 50k in coaching so far into like 4 or 5 years of trading. And for me it was worth it. I was able to recover my investment all the time with these coaches, and of course a lot more. So that was something that really made a big difference for me. If you don't want to get into coaching, fine. Find a friend, find someone who can push you to work harder, to stay accountable. But if you have this accountability, it could even be like your wife. A lot of traders have their wife kind of checking on them a little bit on the trading, and that could be a good thing, right? You can have someone to be accountable for. Now you don't want to make this a hurdle, like a bad thing, but if someone can just like try to push you a little bit to stay accountable to them, that can be a good thing as well. So get some accountability for sure. Number 8 is meditate or be mindful. Now, I don't want to force you to meditate. You don't have to do that if you don't want to do it. The key point here is really being able to understand how you can be more calm and how you can train your mind to not act based on impulse or emotion. So whenever you have a trigger or like a couple of bad trades or anything of the sort, you don't need to act. You could have a trigger, but there's nothing to, you don't have to have a reaction to that trigger. Meditation or mindfulness trains you to do that and trains you to kind of be aware of your emotions but not act on them or act in the right manner on them. And that can be a really powerful tool. If you want to learn more about mindfulness and trading, there's a book called Mindful Trading by Randy Howell, who was one of my personal coaches in the past in terms of trading mindset. I highly recommend you read that book. I'll leave the link below in the description of the video so you can check it out and start to get on that path of being more mindful about trading. Okay, number 9 is to make a plan to scale up. Now, sometimes we need motivation. We need to be able to have a goal that's a little bit more far, like not something you'll reach like next day, but more like a big goal, and we need to have a plan to do it. If we know where we're going, like what goal we have, what plan we have to get there, we're more likely to act properly now, in this minute right now. We just need to be aware and have clarity on where we're going. Then it's going to be easier to stick to whatever needs to be done right now, even though it's hard work now. It's going to be easier to stick to it because we have a bigger purpose, a bigger goal to achieve, and we need to do this now, this tough part of sticking to a plan to get to that goal. So have your plan for whatever vision you have in life with trading, then try to make a step-by-step process to get to that goal, knowing you have to stick to your plan now to be able to get there. Okay, number 10, I've kept this one for last because it's kind of tough. It's something that had a big impact on me in the past. It could have a big impact on you or not, but it's probably the toughest one to do for us because we're traders who like charts a lot. That way or that trick, that hack, is to spend anywhere from 1 week to 1 month at the chart, like watching the charts on a daily basis without trading. What this does is, I know it's tough, you're not going to be trading, of course you're going to be staying away from the charts, you can like look at the trades in the chart, but you cannot enter them. What that's going to do is it's going to practice you to see trades without entering them. You can see a trade on the chart, you don't have to get in. Even if you think it's going to be a good trade, you can just stay away, and that's fine, that's totally fine. If a trade isn't fine for your plan, you can stay away, but you need to be able to train yourself to do that. A lot of traders, unfortunately, are stuck in the fact that they see trades and they enter them right away. Or like Boris Schlossberg, which I interviewed in the past, said, a lot of traders are waiting for the trades to select them versus them selecting the trades. And that's the big issue. You need to be aware of the trades. You decide if you want to take a trade or not. It's your job to take it or leave it on the side and not take it. But by stopping to trade for a week to a month, you'll practice that aspect of staying away from trades and just being able to see the trades unfold, staying away from it. Even if a trade goes in your favor, it doesn't matter. You stay away from it, you learn from it, and then you can even spot it and make notes of it if you want. But that's a tough trick, of course. It's a tough one. I've done this many times in the past. I would take like a week off the market, just look at all the trades on a daily basis. I look at the entire like Asian session or New York session during those days and just kind of see the market unfold, watch the candles go by, but try to learn to be on the side and step away and just see the market play out. And you get to be more calm in that way. You get to kind of spot things about the market you didn't spot otherwise. And that's a very good thing. Leave me your thoughts below on those tips. I want to hear what you think, which one you will apply. Let me know in the comment section below as always. Subscribe if it's not done yet. I publish videos like this 4 times a week, so you want to be notified of these videos. Make sure you click the bell with the subscribe button below on the channel. And I hope we can connect in the Facebook group. The link will be below for that, to be able to join that group for free. And I'll catch you back there pretty soon. Ciao.